I'm going to introduce you now to Master Trainer Dr. Barry Burns. Now, he's a businessman who has owned several small companies. Now, his business background, taught him to focus on the bottom line, so his study of the financial markets was for one purpose only, which is to make profits. Barry Burns furthered his education by reading over 100 books on trading and investing, and he spent over $50,000 in trading courses and education. In addition, he hired 3 professional traders to mentor him personally. Now, all of this research and study resulted in insights which eventually led him to the development of his own methodology. Now, a few of his accomplishments include he's featured as a case study in the book, Using Candlestick Charting, How to Earn High Rates of Return Safely. Also, he's a headlining speaker at Day Traders USA. He's also given seminars around the country at many wealth expos and traders expos, and he's currently one of the featured experts on Trader Kingdom. So, Barry, the floor is yours, buddy.
All right. Thank you, Michael. And thank you, everybody, for being here. And really want to thank the people at Investor Inspiration for hosting the event today. What a great event. All these amazing trainers all in one place, and we don't even have to get on a plane and travel and pay for hotel bills and all that stuff. We get it streamed into our homes like this. It's, wow, it's fantastic. I wish I had this type of technology and people organizing events like this back when I was first learning to trade. So thank you, guys. You're doing a fantastic job bringing in top quality people, and what a great service you provide for all of us. Really, really appreciate it. Okay, well, today I have some great things to share with you. The one thing I don't have to share with you is anything to buy. So I'm in, kind of this position where I'm not selling anything today. So put your wallets away, put your purses away, sit back and enjoy. You're welcome to take notes if you like to. I do have a free gift for you at the end, which is absolutely free, no charge whatsoever. Just my way of saying thank you for being here and spending the most precious commodity that you have, which is your time. And so let's get started. I'm going to share with you the method that Michael referred to there briefly, and it is my favorite trading method of the last 10 years. I've been trading for a lot longer than that because, as he said, my dad was a trader, and it was his passion and avocation in life, so I had no choice but to hear about it day and night, every day of my life, because my dad just would always talk about it. So he started teaching me when I was 8. And I'm 55 now, so 47 years ago is when I first started my trading education with my dear old dad, and it was just great. So a little bit more about myself, a little more updated information. There's my ugly mug for you to see. I've received numerous, every single year actually since I've been nominated, I've received Reader's Choice Awards from Stocks and Commodities magazine. A new update, I just finished writing a new book, Trend Trading for Dummies. This is part of the famous Dummies series by Wiley & Sons publisher, and that's to be released, well, very soon. I've done my part, and now they're just putting all the finishing touches on it, and the editors are making my lousy writing into actual readable writing. And so that should be on the bookshelves within, I'd say, a month or two, hopefully. I've also been featured in the Complete Guide to Investing in Derivatives. I've worked with doing seminars for Ninja Trader, the CME Group, written articles for eSignal, actually working, just finishing up right now. In fact, we just finished some software for Metastock. I've worked with Eurex Exchange, providing training for them. I own highprofitcandlestickpatterns.com. Michael already mentioned the Using Candlestick Charting book. So yeah, I've been around the block and I've done quite a bit, so just wanted to, kind of let you know that I'm not new to this and been recognized by many very viable organizations. A quick important disclaimer, and you see these disclaimers everywhere, and obviously they're for legal reasons, and that's appropriate. However, I also want to emphasize that this is where your education really begins. This is the anti-hype slide. The actual fact is, and this is total transparency here, this is not just to cover my butt, although it is for that, but it's also for you. In fact, it's primarily to help protect you from getting hurt. Trading is simply not suitable for all people. Also beware of leverage. Talk to your broker about that. Make sure you understand what kind of market leverage or margins being made available to you, what your maximum risk exposure is. Your broker can look at your account, see what you're trading, and they know what their margin requirements are and so forth, so they can fill you in on that. Only use what we call discretionary money because trading is so incredibly risky, and it is. You should only use money you can afford to lose. So please, please, in the name of all that is holy, never trade with money you need for your retirement, your kids' college education, to put roof over your head or food on the table. All information in this presentation is for educational purposes only. I'm not going to be telling you today what you should buy or sell or when. My goal is to empower you to be able to make those decisions for yourself so that you become independently wealthy. And you're only independently wealthy when you don't rely on anyone else for buy or sell signals or further education or anything like that. I mean, our education never ends, I guess. I still continue to learn new things here and there. But, I'm not reliant on anybody to help me make money trading. I know I can pull up the computer and make money, and that's what I want for you. That's what gives you a sense of security and empowerment and safety. So that's basically it. Obviously, the information here is at your own risk for general purposes only, and etc. Okay. Now, here are some of the most common problems, struggles, frustrations that traders have told me that they have. And you can see if these apply to you. Number one, people have said, and I've taken surveys of literally thousands of traders to get these answers. One is very commonly stated this way, and I've kind of reworded to put a bunch of them together. They say, well, I enter the market, and let's say I see an uptrend, and so I want to buy, and I buy. And then after I buy, of course, the market turns around and goes down and stops me out. Then, right after the market stops me out, then the market goes back up in the original direction of my trade. That is a very frustrating thing. That's about timing the market. You were right, but at the wrong time. Another one that people say they struggle with a lot is getting out of big moves too soon. They got into a big move, but they got too excited about seeing their P&L go green, and so they got out too soon, and therefore it was opportunity lost type of error. Getting stopped out too often is a big one. Not knowing the best place to exit the market. This one I hear all the time. Not sure where to get in, but also I'm not sure when to get out for the optimal profits. And trading a trend that doesn't follow through. So a lot of people can look at a chart and see general direction, and then they trade in that direction, and then the trend fails right after they get in. I'm like, man, market seems to always know what I'm doing and is always against me, and I've had people be so paranoid as to think their broker's trading against them intentionally, against them as an individual, and the whales are watching their $5,000 account and trying to ruin them. No, it's not that. There's other things involved here, and I'm going to share with you how to resolve these issues today. So this methodology that I've settled upon, that's my favorite method, is what I call the 5 energy methodology. And all I'm doing, it's actually quite simple. I'm measuring what I call the energies in the market. Okay, so what are these energies? Well, first of all, let's just list them. There's 5 that I look for in every single potential trade. And when I trade, by the way, I like to use the term methodology, because that's how my trading is. It's very methodical, it's very organized, it's very orderly, it's very rule-based, it's very objective. So I'm never confused. When I look at a chart, I never have a confused mind. I'm always very clear on what I'm going to do, or if I want to do nothing. I have perfect clarity of that. That's very, very important. And it starts with having a rule-based methodology, number 1. And then number 2, it has to do with also managing your own mind, the way you look at things. So when I look at a chart, I always look at it the exact same way every time. Very orderly and organized to keep my mind clear. So step 1, I look at a chart. The very first thing I look at is trend. That's simply direction. Is the market moving up or down? And that's so that I know whether I'm looking to buy or I'm looking to short. Then number 2, I ask myself, what's the momentum in the market? What's the energy of momentum? Is it strong? in which case the trend would be expected to continue, or is it weak? Now, momentum is the strength of the trend. So here's where it comes in when people say, gosh, you know, I get into the trend, and then as soon as I get in, the market goes in the opposite direction. That's often because they are not familiar with the energy of momentum, or they just don't know how to measure it accurately. They don't have a good tool for it. So this is what we do. We say, well, if the trend is strong, momentum, see, momentum's like a train running down the track. You can't stop that train once it's going on a dime, right? Even if you say, okay, let's put the brakes on, the train is still going to keep going for a little while. Momentum will carry it. So it's the same thing with trends. If there's momentum behind that trend, it may start to slow down, but it's not going to stop right away. So we should be able to make at least one more higher high. On the other hand, if momentum is weak, then I'm not going to trade in the direction of the trend because I say there is no momentum behind this movement. Therefore, I do not expect it to make a higher high. In fact, I may even look to fade the trend, wait for the next high to be put in, and then take the opposite direction. If it's an uptrend, I would actually short that and fade against the amateurs. The third energy then that comes in after I've established 1 and 2, and again, they're always in this order. So now I've got a direction, say up, it's strong. Now the question comes in, okay, when do I want to enter this trade? So this is where the issue, the problem, the frustration of people who say, well, I got into the market, I bought into the trend, then I got stopped out, and then the market went back in the original direction of my trade. So they might have gotten into a strong trend, which was good, but they didn't know the optimal time to enter the trade. So perhaps they got in at a point A of an ABC complex retrace where C made a lower low than A. That would be one, simple example of how that could happen. So we want to know the optimal time. We want to buy the final cycle low, the final correction against a trend before the trend then resumes. And there's a way of doing that with amazing, amazing accuracy. In fact, I have a timing tool on that I actually will be happy to give to you for free. Then the fourth energy, after all of that, then we look at if we have those three things in place. See, if we don't, we've stopped. We're not going to take a trade. But assuming we've got 1, 2, 3, then number 4 comes into place. And this is where support resistance comes in. I want to be buying off a level of support and shorting off a level of resistance. Or resistance levels will become my targets if I'm buying. So it's a blockage of energy. I like to buy and sell on retraces against the trend. I'm looking for weak movements against the trend that then hit a blockage area, a zone of support or resistance that the market then in weakness will bounce off of and then continue and strengthen the direction of the trend. And finally, the fifth and last energy that I look for in every single trade, and that's what characterizes these 5 energies as I look for them on every single trade, is what I call the fractal energy, or the energy of scale. And that simply means that I'm using multiple time frames. Very common practice. If I'm trading based on a daily chart, I'll look at a weekly chart as well, and that weekly chart is what I call my fractal energy. If I'm day trading, let's say I'm trading a 1,000 tick chart, then I would look at a 3,000 tick chart, and the 3,000 tick chart of the same market, that is what I call my fractal energy. Now, most people use the fractal energy, the next higher time frame, to say, we'll only trade in the direction of trend of the next higher time frame. I do things a little differently, and if we have time, I'll show you how I do it differently. Now, so those are the 5 energies, and that's pretty much what my trading is. I'm going to show you a few charts here to show you how it looks. But first, I already said that my trading is methodical, rule-based, objective. So, how do I measure those 5 energies? I don't allow myself to just look at a chart and eyeball it and subjectively say, well, it looks like the market's moving up, therefore we're in an uptrend. Again, not objective enough. It's 2 different people might look at the same chart and get 2 different answers. So what I want is I want instruments that give me a readout. It's just almost like a plane or your automobile where you have the dashboard and you have the instruments there, and you could be driving down the road and you could say, oh, it looks like I'm going about 55. But And that might be pretty close because you got a lot of experience driving. But then you look down at your speedometer and it will tell you exactly how fast you're going. It will be very precise, more precise than you eyeballing it. Okay, and so that's what we want. We want instruments to measure each one of these energies and tell us exactly what that energy is, very precisely and with just perfect accuracy. Now, what I call instruments, most people call indicators. And some people believe in indicators, others don't believe in indicators. I don't think they're anything to believe in or not believe in at all. All they are instruments. Now, I share the same skepticism that a lot of people do about indicators in this sense. I don't believe that any indicator will make me any money. What I do know an indicator will do with accuracy is measure the energy it's designed to measure. So it gives me a readout of that measurement. Then I take all those measurements and I make a decision based on my rules of my methodology whether or not I want to take a trade. All right? So first of all, for trends, these are the instruments that I use in general. Go through this real quick. For trends, I use a moving average. For momentum, I use a momentum indicator, of course. For cycles, I use an oscillator, which I'm happy to give you. Support resistance, I use things like previous cycle highs and lows, previous wave highs and lows, floor trader pivots, Fibonacci levels, the typical things. And for fractal energies, I generally use a chart interval 3 times that of the setup chart. So if I'm using a, let's say I'm using a 10-minute chart to trade off, I would use a 30-minute chart as my fractal energy. Now, why am I doing this? What's this all about? This whole thing, in fact, all of trading is about one thing, determining a probability scenario. And let's be very clear on something, again, toward the anti-BS thing. There is no certainty in trading. Okay, there's none, zero certainty. It's always risky. And so you'll always have some losing trades, and that's okay. Everyone does. The best traders have losing trades. We never know for sure what's going to happen in the future on any one given trade. However, what we can do is we can establish, based on a trading methodology that's well tested and proven over time, we can establish probability scenarios where, over a large sample of data, meaning a large sample of trades, the odds are on our side. So we'll win more often than not. And this is exactly what makes trading different than gambling. If you go to Atlantic City or Las Vegas and you go and you pull the one-armed bandit, the slot machine, and that machine is programmed against you. It is programmed, it's kind of like a trading methodology except that the odds are always going to favor the house over a large number of pulls. A good trading methodology does exactly the opposite. It puts the odds in your favor. What will happen on any given trade, any given pull of the lever, we don't know. But we do know that over time, over a large sample of data, a large number of trades, we are going to come out ahead, and that's the difference. As long as we're disciplined, that's the other element, as long as you're disciplined enough to keep to your rules. So then, of course, the next question is, okay, that's fine, but how do we create a probability scenario that favors us? So here's how I do it. I've already set the stage. At each potential entry point where I'm considering entering the market, I ask myself one simple question. How many of those 5 energies are all aligned saying buy or all aligned saying sell? Based on that answer, I give each setup a score of 1 to 5. The higher the score, of course, the higher I consider the probability of success. I liken this to taking each trade to court. I need 5 independent witnesses to establish a preponderance of the evidence. Now, the operative word there is independent. This would not work. In other words, it wouldn't create a probability scenario if I had 5, say, trend indicators, because they're redundant. It's kind of like they say wearing a belt and suspenders at the same time. So the reason this works is because those 5 energies that I told you about, each one is uncorrelated to the other 4. They're completely independent of the other 4. So as a quick example, let's say that price trend is up. Okay, so sometimes when price trend is up, go to energy number 2, momentum is also up. Then we would say they're both aligned, they're both bullish. Other times when price is trending up, momentum will be just flatlining, zeroing out. In that case, they are not aligned. Other times, price will be trending up and momentum will actually be trending down, going in the exact opposite direction of price. And how can that be? How can that happen? Well, that's because there's no direct correlation between those two energies. And that's exactly what makes it significant when all 5 energies agree saying buy or sell. Okay, it's simple as that. Now, let's look at some charts so that you can see visually how this works. Okay, so we'll go through the 5 energies with charts. Here's chart number 1. In energy number 1, trend, simply looking for direction. Here's a chart of the euro. By the way, this works with forex, stocks, e-minis, any types of futures, crude, gold, you name it. You know, I trade them all myself. So, and it's great for options too. This is how you analyze an underlying chart before you make your option decisions. So trend is direction. Now, the indicator or instrument that I use to measure trend is the 50-period simple moving average. That gives the overall direction of the market. It's the red line here on this chart. All right, so that is great, except most people say, in fact, it's an orthodox definition to say that trend is defined by higher highs and higher lows. That would mean that this little section here would be an uptrend. We have a higher low and a higher high. Is that an uptrend? The answer is no, that is not. How can I be so definite? Because when we want to know the definition of a term, we go to the dictionary, of course, and Webster's dictionary defines trend this way: to extend in a general direction. Now think about that. That means a long-term move, to extend in a general direction. So trend is not about short-term moves. Trends are long-term moves. So little higher highs, higher lows, this is not the trend of the market. The trend is the long-term move. That's why we use a 50-period simple moving average, a long-term indicator. A short-term indicator, again, would not give you the long-term direction of the market. It would just measure short swings and short oscillations. We have other things that do that. So this little higher low and higher high, that's just a short-term complex retrace in an overall downtrend. Now, there's a disadvantage to using a long-term indicator, and that is that even though it's more accurate, it is a lagging indicator because it is slow. And so we acknowledge that, and that's why we don't trust it alone for trading. It's just one part of our trading methodology, and by itself, I would never trade it, never by itself. So then we need to go to energy number 2. Remember, the number 1 does not create a probability scenario. That's why I don't trade any one indicator. No one indicator makes us any money. It just measures a particular energy. That's it. So then we have to add, then we go to step 2, which is energy 2, momentum. Here we have higher high, higher low, higher high, higher low. 50 MA is up. At this point, if that's our current date that we're trading at current time, is the trend up? Answer, yes. At that snapshot in time, trend is up. However, as you can see to the right, the trend then stops. It fails. So, why? How would you know that? How would you determine that this would not be a good place to buy? This higher low? Good buy. This higher low, bad buy. How do you know? The 50 MA doesn't help you. The price structure of higher highs and higher lows doesn't help you. The candlestick patterns don't help you. That's a nice engulfing candlestick pattern right there. It's a nice spike bottom, very good bullish candlestick pattern. The problem is you are blind to momentum. I've got my momentum indicator down here, but I've got a black curtain over it. And momentum is what tells you if the trend is strong or weak. Also, momentum can provide a leading indication of the market. And the reason for that is, again, because it shows strength or weakness. So let's uncover the momentum indicator and show you how that works. So going back to our original question, How would we know to buy this lower or this higher low? Go down to our momentum indicator. Here's the 0 line. And on the retrace, momentum stays above 0, well above 0. That means it's strong to the upside, and that is a strong trend at that time. Therefore, we expect, as I said with the example of the train, that momentum will continue in this trend and the market will make a higher high, which it does. Now, here's our first warning. Much higher high on price. On the momentum, not a higher high, a little lower high actually. So that's kind of our first warning that, there's a little weakening in the market moving up here. Then on the retrace, even though we make a higher low, look at momentum. Momentum not only makes a lower low, but it goes to 0. Now there's no strength in that market. Therefore, having seen this, which most people don't see, I look at that and I'd say, nope, I'm going to pass. I'm not going to buy that. In fact, as I said earlier, see, that's how it's a leading indicator. It shows you the weakness before price does and before a trend indicator does. And so I might even say, you know what? I'm going to let the amateurs buy that. And sure enough, people bought it, went up a little bit. And then I'm going to wait for the next high, and I'm going to fade the trade. I'm going to go short. You could go short there, be aggressive. You could go short there. And if you wanted to be really conservative, you could wait till it actually got below the 50 MA. And 50 MA provides resistance and go short there. The third energy is cycles. I'm not going to cover this too much today. I've got a basic cycle indicator. It's more complex than this. But cycles, with our reference today, is just talking about timing. So markets don't go straight up or straight down. They kind of wiggle up and they wiggle down. They're the rhythm of the market. They're the expiration of the market. They're the inhale and exhale of the market. And so we want to buy the lows when the market's going up. We want to short the highs when the market's going down. And you know, it's amazing to me. A chart is a two-dimensional object, price on the right and time at the bottom. There's only 2 dimensions to a chart. And yet most traders I know don't have any clue of a good timing tool. All the tools they use are based on price. Well, that's only half of the information on chart. How can you possibly establish a probability scenario, which, as we've said, is what trading is all about, when you're only using 50% of the information? You're leaving out 50%. So at best, you got a 50-50 chance. And W.D. Gann actually said of the two, time is more important than price. So I've got more on that for you later. We don't have time to cover all that today. Energy 4 is support resistance. Here's some Fibonacci levels. Now, just look at this. You can see the horizontal lines from the Fibonacci levels. And just at a glance, you can see that price action sometimes goes through those levels, and other times it bounces off of those levels. So the question is, how do we know when the market will go through them and which ones it will respect and put in a higher low at? And the answer is you don't know. Again, just using support resistance alone is completely meaningless, does not help you, does not answer that question. You have to put together the energies. And you have to ask at each level what else is going on with the other energies. So I've only got 15 minutes left, so we'll just take this example over here. Okay, we come up to this resistance level. What is it? Well, first of all, it's the 50% Fibonacci retracement. Second of all, it's also that wave high. So it's a cluster of resistance. That makes it kind of a double thick wall, a little stronger. Number 2, we've got an engulfing candlestick pattern high. Number 3, trend is down. Even though we're above the 50 MA, the red line is down. Therefore, direction that we want to trade is short, not long. Number 4, our cycle indicator turns over here, turns from green to red. And number 5, momentum. Well, when the market goes down, momentum is pulling down way below the 0 line, way below the 0 line. When the market goes up, momentum barely gets above the 0 line. So there's strength going down, weakness going up. So when all that is put together, weak move up, you need strength to go through support resistance. This has weakness. The time is right for this to hold. And then the candlestick pattern confirms the indicator as well as direction. So it's all put together there at that level. And then finally, the 5th energy, the fractal energy, multiple time frames. So let's say we're trading this based on this chart over here. Price is above the 50 MA, it meanders below the 50 MA. The 50 MA is the red line again. That is our directional indicator, so now we're looking to go short. Cycle indicator finally comes up and turns down. Momentum is below 0, so again, down. Resistance of the 50 MA, and also again an engulfing candlestick pattern. So everything is aligned to go short here. So then what we have to do is come to our next higher time frame. And in this one, again, a lot of people like to say trade in the direction of trend of the higher time frame. For me, I don't like that, since trend is a lagging indicator, and this is a 3 times slower chart. We got 1 bar here for every 3 bars over here. So why would I want to use a lagging indicator on a 3 times slower chart? The price correlation between the two charts is too loose. See, it's kind of like my first car that I had. That first car, I couldn't afford a nice car, so I got an old crummy car. And it had a lot of play in the steering wheel. You know, I could turn it 5 or 10 degrees to the right or left, but the front tires wouldn't turn. So that's what happens when you use a lagging indicator in a 3 times slower chart. The price action here is not going to be reflected on an indicator over here very quickly. So what we want to do is, instead of using the lagging indicator on the longer term chart, we want to use the leading indicator, which is momentum. So if I'm going to go short here, I have to make sure that momentum is angling down on the longer term chart. And when it does, then I can take the chart. I actually use that as a filter. So let's put it all together and just see. I mean, this is it. This is my trading method. So we'll go through the 5 steps here. Number 1. Okay, we'll look at this chart first. This is our setup chart. Trend has been going down for a while. Now, another one of my rules is, if I trade with the trend, and by the way, I have other types of trades other than trend trades. Sometimes we trade against the trend, like with those momentum shifts that I showed you. Sometimes we trade triangles and all kinds of things. We have all different kinds of trades. But when we're trading with the trend, we only like to trade early in a new trend. It's like the old saying, the trend is your friend until the end. So we don't want to trade until the end. We want to trade early. So this trend's been going down for a while. We're going to wait either for a momentum shift, which we could have done here, but just to make it a trend trade, we wait for the price to pop above the 50 MA and retrace back down. Now we're starting a new trend. I will take the first 2 retraces in a new trend. So energy number 1, yes. So we've got a score of 1 out of 5 so far. Is that enough for a probability scenario? Nope. We need more variables than that. So then we go to number 2. Is it a strong trend or a weak trend? Here's momentum. There's your 0 line. It holds well above the 0 line, so therefore it's a strong trend. We have a score of 2. Cycle, we need a cycle indicator. Cycle indicator turns from red to green, goes up. So timing is right. We got a score of 3. But we want to be bouncing off some sort of blockage of the retrace down to bounce back up. And we have that with the red line. That's the 50% Fibonacci retracement level. So now we have a score of 4 out of 5. And then we go to the next higher time frame. Now, the 50 MA is angling down over here, but we want to go long. Again, we're trading against the trend on the longer term time frame, but we don't care because that's a lagging indicator. Go down to momentum. Remember how I told you a trend could be going down and momentum going up at the same time? There you go. These energies are not correlated. So I use momentum on the next higher time frame because it's a leading indicator. It's faster. It closes the correlation between these 2 time intervals. And momentum is angling up. Therefore, I've got a 5 out of 5 trade. And yes, I can take that long. And that's how simple it is. So let me give you a quick summary here. We're waiting for the alignment of 5 energies to put the odds on your side. And you know, I was invited to one of the biggest trading clubs in the world, actually, and I spoke, and it was great. Great people, really wonderful, wonderful experience. But some people took me out to dinner one day, and that was very nice. And then they brought me they kind of grouped together to create what they hoped would be the ultimate trading system. And so they brought it to show it to me, and it wasn't finished yet. but at that point it was up to 200 pages long. In fact, it was a little more than 200 pages long when they showed it to me, and they weren't quite done yet. And I didn't say much. I just said, wow, it's very interesting. You guys put a lot of work into this. Okay, my trading system is 1 sentence long. So all we're doing, and you're welcome to write this down, look at a chart. What's the trend? Use your instruments to determine that with black and white accuracy. Make sure it's strong, energy number 2, momentum. Then if you got that, look for the right time using the timing indicator, making sure you're bouncing off support if you're going long or resistance if you're going short, and then confirm it by momentum on the larger scale. And that's it. It's a very robust system. This works for a variety of markets. I use the same 5 energy method whether I'm trading stocks, commodities, options, currencies, or futures, and I trade all these markets now because I'm just looking for wherever there's an opportunity. I'm constantly scanning all the markets, looking. There's always an opportunity somewhere. There's always something good happening somewhere if you're looking at all these markets. And I do investing. I do that in my retirement accounts, and I do swing trading, and I do day trading, but I still apply the same 5 energy methodology for all 3 time frames. And people ask me, well, how can the one methodology apply to all these markets and all these time frames? First of all, I'll add one caveat to that, is that the market needs to have good volume. And the reason for that, and our previous presenter referred to this and was very accurate, we want professional participation in the market. We want professionals to be participating for all the reasons she said. So therefore, we want to trade markets that have good volume. I'm not into pink sheets or penny stocks or any of that kind of stuff. However, the reason that it's so flexible and so adaptable and will work for these different markets, different time frames, is because we're simply measuring energies. Objective energies. So it's transferable. It's like if I had a tortoise on the ground, okay, and that tortoise started crawling, I don't know, east. So how would I measure, what instrument would I measure the trend of that tortoise? Well, I'd use a compass, right? And that compass, I looked out the compass and it shows me the tortoise is crawling east. Okay. Now I pick up the tortoise and I put down a completely different kind of animal, let's say a cheetah. And I've heard cheetahs can run 70 miles an hour. Okay, very different type of animal than a tortoise for sure. Do I need a different instrument to measure the trend of that cheetah? No, I can still use the compass. And so it's the same thing here. We're just taking an instrument, we're putting it on a chart, and then you can add whatever market you want or whatever time interval, and that instrument will measure the trend or momentum or the cycle of whatever market in whatever time frame you add on there. So very simple, very objective. Pretty much we're counting to 5. So here's the free stuff I've got for you today. By the way, again, my name is Dr. Barry Burns with Top Dog Trading. I'm the founder of Top Dog Trading, actually. And you're welcome to send me an email at barry@topdogtrading.com if you have any questions, since we're just about out of time here. I'm very happy to answer any questions. Do not feel shy or think that you're bothering me. I love talking with traders. I love conversing with traders. So please know you're doing me a favor if you contact me with any question you might have about anything here today or anything at all about trading. But today what I'm giving you is my free 5-day video correspondence course. And what this is 5 days of professional trading video lessons. So each day you'll get one video. They're short. They're maybe 10 or 15 minutes long. And they teach you something about how professionals trade differently than amateurs. That's the theme of this series of videos. How professionals trade differently than amateurs. Okay? And at the end of each one, you're going to have an interactive quiz. And so you'll be able to test yourself on that lesson. Now, of course, only you will know, your answers. That's all very private, but you get immediate feedback. And then if you have a wrong answer, it gives you the correct answer. Also, on the 4th video, I'm giving you one of my very favorite trade setups in the world. In fact, whenever this sets up, I always take it. It's that good. It's called the rubber band trade. and it is phenomenal. So you get that trade set up absolutely free. You can take it, run with it, and trade it for the rest of your life. Also, next Tuesday, or this coming Tuesday of next week, I'm giving another free webinar, totally free, and at that I will be giving you my personal cycle tool, my cycle indicator. So I referred to the cycle indicator today, and obviously we didn't have enough time because we've only got 3 minutes left today. And it is not really proprietary. In other words, the indicator I use is already on your charts. But what I do is a very common indicator, so no matter what charting platform you're using, you can use this. So I take that indicator and then I make changes to it. And I'm going to show you on Tuesday what changes I make. Then I have to show you how to trade it, because just having the indicator alone isn't enough. You're going to have to be taught how to trade it. And on that webinar, I will be also showing you exactly how to trade it. In other words, just like price can have different price patterns, head and shoulders, triangles, double tops, wedges, things like that, indicators also have patterns. And there are certain patterns I trade on that cycle indicator that give you an extremely high probability that you have found the final low before the market continues going in an uptrend, or the final high before the market continues going into a downtrend. And of course, the point of that is so you can get in at the optimal time and not get stopped out. So all of that is for free. Next Tuesday, we'll be having that webinar. So you get access to all of that by just going to topdogtrading.com/free.html. And I see Michael already typed it into the chat box. So you should be able to just click on that link and go right to that. And when you get there, you'll get an email today with your very first video lesson. And then you'll also get information about how to register for the webinar. No cost for it, but just need you to register so that you can get into the room. All right, well, that's it. I've got 1 minute for all your questions now. Well, obviously, we're going to have to refer questions to the email. So thank you all for being here so very much. And thank you guys for hosting the event today. What a day. Wow. What a jam-packed day of great information, great educators, great traders. You guys always get the best of the best, and thank you so much for organizing this. Really appreciate it.